What is tax strategy? So many people ask this question and are so far off because most people think it's tax prep. So let's talk number one about strategy versus prep. They're very different. And number two, the 5 moves that will make a real tax strategy plan. And last, how do you build a team that actually gives you a tax plan year round? Because that's really what you need to be doing. So the direct answer is this. A tax strategy is a proactive, year-round plan that legally minimizes what you owe before income is earned, not after. In the Millionaire Maker book, I talk about taxes as the #1 wealth leak for Americans. So most people don't even think about taxes. They see it, I call it an invisible pain, because they're just used to paying. And there are people who literally pay hundreds of thousands a year. And here's a math equation. You can just do one yourself as well. Take $10,000 a year. And if you overpay $10,000 a year, which some of you would probably love to get your taxes down to $10,000 in a year. I don't pay more than $10,000. I pay way under that. And because I have an extraordinary tax team that uses the whole code, the entire IRS code is used if you truly have a plan. And if you're doing your taxes yourself, you're doing TurboTax, you're doing H&R Block, or just what I call the simpleton stuff, you're not getting the strategies. I mean, if TurboTax is going to give you maybe the 15 to 30, I think there's 33 maybe deductions. When you have 83,000 pages of tax code, why would you do your own taxes? You're not a surgeon, and our tax teams go to school as long as surgeons go to school. So why are you doing this? So back to the math equation. For every $10,000 that you ever pay for 20 years, if you could invest that money and knew how to invest that money at 12, 13%, depending on that variance, you would have made yourself a millionaire just by saving in taxes and not overpaying. And those of you who have businesses, if you're a sole proprietor, if you have rental real estate, and you join our team and our community, we will probably go back and have our tax team look, if you qualify, and give you a 3-year tax return review. You'd be shocked how many deductions are not taken by most people because you just don't know, or you're scared of an audit, so you play super small. So let's talk about the strategy versus the prep. So tax prep is what you do with a bookkeeper all year long. And in fact, I have a finance for non-finance business owners class. If you go to askbookkeepingcoach.com, you can click in there and get our 8-week course, which literally in a very, very short window of time will reset your company and your base systems to have what already would be prepared, like a tax prepared system. So it separates your personal and your business expenses. It goes through your deductions. It goes through your assets and liabilities. It gets down to a cash flow statement. So it's a phenomenal course that we built for you to go through and really start understanding it. So preparation is not, here's what it's not. It's not at the end of the year, you gather all your receipts, your bank statements, your credit card statements, and you hand it to some CPA and say, here, all you're doing is asking them to be a historian. There is no strategy in that. All they're doing is preparing a tax return and filing with the IRS. That's it. So tax prep is just the filing of that document. The strategy is all year long. The strategy starts in January with how much money you're going to make, what companies are going to make the money, what are all the legal deductions that you should be taking, and then after Q1, you revisit. You say, all right, well, I made this much. So you're either on target or you're under target. And if you are like totally rocking it, you probably need to even get another corporation. We see that with a lot of our clients. Like the first quarter, they do well. Second quarter, they're doing even better. By third quarter, they're going to need another company because there's not enough room for one company to make $250,000, $500,000, $1 million in one company. You probably, if you're making $1 million, you probably should have at least 2, if not 3 companies, and the strategy between them contractually bound. Now, a lot of you go to the Secretary of State, make a huge mistake because you don't know if you should be an S Corp, a C Corp, or an LLC. And even if you just chose the cheap one, the lighter one, I'm going to say it, the LLC, how should it be taxed? Should it be taxed as an S or a C or a partnership or a sole proprietor? So again, tax strategy leads your wealth planning. And strategy is by Q3, what do you need to do to invest your money now? So investing is a massive part of tax strategy. So for example, buying gas and oil, aviation, real estate, water and mineral rights, those are huge tax deductions. If you have a 401k, you can put a ton of money in there before you get taxed. You can buy a 6,000 gross weight vehicle. Are you using the Augusta rule? Are you using any of these tax strategies? So by Q3, you start really looking at what you need. So you preserve some cash to do the investments that are needed to get the tax down. So you basically are living all year long with a strategy plan to pay the least amount in legal taxes. And if you don't have somebody that you're meeting with, a minimum of quarterly. I would say quarterly if you're doing $1 million or less. If you're doing $1 million and more, you should meet monthly. And if you are doing in the 10 plus million, I know people who meet weekly with their tax strategist because you got to move a lot of money. You got to do a lot of strategy to say you're a $10 million company. Are you going to pay tax on 10 million or are you going to do the most benefits that you can do, officer and director benefits? There's so much you can do to minimize. Now, the 5 things are absolutely vital and in order. So write these down. I'll read them off to you that are absolutely vital that will make up this real tax plan. Number 1 is the entity structure. You've got to get the right business structure so you can actually maximize the most deductions out of it. Deductions are the legal expenses that you're going to run through your company. So the way I look at this, I call it forecasting forward. You look at all your personal expenses and with a tax strategist, not a bookkeeper, you start moving all those expenses into legal deductions. So say you ended up with 3 companies. Which company takes the car? Which company takes the phone? Which company takes the technology? Which company takes the intellectual property? You don't know enough, nor you should know enough to even understand all of that. And if you ask any of the AI agents, I'd be very careful. I don't know that they're that educated in how to do strategy. So again, I wouldn't trust it completely. And if you don't know how to verify, you got a bigger problem. Retirement contributions, a huge part of a tax strategy. Again, a 401k, a SEP, IRA is a defined benefit you get to pay before taxes. Depreciation is enormous. So again, back to the assets that I mentioned earlier, that's going to affect your depreciation schedule. And I think, honestly, tax strategy is a precise, pinpointed determination. And when you have the right tax team, you can make your tax predictable. So when people say, I just don't know how I'm going to be taxed at the end of the year. I know exactly how I'll be taxed at the end of the year. And I've known for decades how I'm going to be taxed at the end of the year. And it's the legal minimum amount because I'd rather invest, say, $100,000 in a gas and oil project or a real estate project or an aviation project, use all the depreciation and pay the least amount of tax. Most of you say, I just don't have time. I can't be bothered learning this. And you just overpay tax consistently. It's amazing how many people overpay tax. The last of the 5 steps is your income and when you recognize it. So you're going to recognize it in this year. Can you recognize it next year? Depreciation can also be split. So again, a really good strategy is, I'd say it's precision. It's absolutely down to a pinpoint and it could be prescriptive. So if you're serious about this, you want to call our office at 775-588-9200. And in the show notes, you can download the book, read up to chapter 3, do a gap analysis, where you are, what do you want, and have one of our team members go through and see where are your gaps and are you overpaying tax and what's your next step with us so we can actually support you and help you. So while you're here, I want you to subscribe to the channel, click the notification button. I want you here 5 days a week. We have content every day. It's family friendly. 5 years old and up. And by the way, if you have kids that are 5 years old to 18 years old, they should be working for your company as another deduction. If you don't have kids, you should get them. They're tax deductible. So the biggest part of this is your team. And it's not just finding a simpleton CPA, it's finding somebody, and the questions you would ask them is, what are the typical kinds of returns you file? If they're doing 1040 EZs, they're not your people. Unless you are just employed and you don't have a company, none of this is going to apply to you because you have to have a company to do the deductions. You can be employed and you can do some great asset investing, but you're still missing an enormous section of tax strategy by not having a company. And we have a lot of employees that are very critical. They work for the government, they work in schools, they work for the fire department, they're police, whatever they do, but we need them. And they have big W-2 paychecks. And the only way to offset them is they need what I call a cash machine, a business where they can take the deductions legally to reduce their taxes without that one component, which a lot of people miss. They think they can make a lot of money. Like I have a new client that's making 1.2 million as an employee for a hospital. And that's an enormous, enormous tax burden for him. I mean, he's at 40+%. So hundreds of thousands is going to be owed in taxes unless he has a strategy, which is why he's here. So we're helping him get companies set up and he's meeting with a tax strategist. So yes, they're CPAs or they're EAs, but they have an enormous amount of experience of using the whole code and sitting in a client relationship. Here's the real bottom line. You're either going to pay yourself and buy assets, reduce your taxes, or just overpay taxes and don't complain about it. So your team is a vital part of this. And it's not just the tax strategist. Once you put them in play, and what I do on the team is I help you navigate between a bookkeeper, a tax strategist, doing these financial forecasts so you actually can get some precision around your tax. And we'd love to help you. I love doing this. I will do this probably till I walk off the planet. If you have questions at any time, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow. Let us help you.